The SP 500 and the Nasdaq 100. We're not going to waste any time at all. We're going to jump right into the content today. So let's get right into it. So what we're going to do is look at some levels specifically, and then we're going to go over a report going over the CPI that came out and just kind of detailing my opinion on it. Now, when we go from yesterday, there was a lot to talk about, but basically we said if we came out above a 6.5, we assumed we would move up. Something we've been talking about a lot on these live streams lately has been the idea of pricing in the movement. And it was something that I mentioned very late in the day yesterday. I made the video kind of early yesterday. So I just wasn't able to go back and just add things, and I didn't have time. And so when we look at this movement, it's becoming more and more apparent that a bulk of this had been priced in. And it's something I said in Discord specifically. I think I said it on Twitter also. But that was my concern. And so before we go any further, I do want to address that I started grabbing puts for March 17th on the Q specifically, but I think SPY is also really good right now. I think you're getting kind of a bang for your buck on both of them. I think they're both affordable. They're both going to move decent. And I think they both have really good open interest and volume. So it doesn't matter. Both will do really well. If we look at the market overall, though, we're seeing a lot of puts coming in on IWM. I'm going to have a video going more in detail over that either tomorrow or maybe this weekend. But I just want to cover this. So far in the price action, let's just talk about this. I just want to show you previous supplies. We had a supply. And then our next one's up here around like 40.50, but my real target is like 4100 if we're going to push up. Now, what are we looking at here? I just want to show you what's happening so far. You push above, you kind of get below, but ultimately you mount that area. Okay. You push above again, you mount that area. You push up, we've invalidated the supply. That's why it doesn't say supply. We're trying to hold it right now. We'll get an answer tomorrow. Now, as I open swings, I'm okay with being red initially. It doesn't really affect me that much. I kind of would like to be red so I can average in, get a better position, and that's just kind of been the name of my game so far. Now, as we look at this, we're moving up. So looking at this chart from naked eye, it looks really good, and it does. It does not look terrible, does not look bad. Let me give you my thesis, my viewpoint. If we look at the Fed Fund futures, they are pricing in now a 0.25. It's about 100% likelihood now. It's like a 90, it's like 90 all the way to 100%. It's like right there. So it's almost guaranteed to get a 25 point hike at the next meeting. I mean, people were calling me a liar that we weren't going to get that. So I don't know what else to say. The data is there now if you want to go fact check me. And I recommend that you do. That's our going point now. But based on getting good CPI numbers, quotation marks, and then getting the 0.25 hike that we're most likely going to get now, the market didn't really do much today. And what do I mean by that? If we go to the daily time frame, let's talk for a sec. This is your daily candle. You basically opened up at 39.90 and you moved up 10 points total. That's where you're at. Now, granted, I will say you got a retest of some key areas. You held them. But overall, I just want to highlight, we didn't move that much today. As green as it may have been, that's where we're at. Okay. Now, a few other things I do want to talk about. Let's just cover them really quick. And before we get into that, I have to ask you to do two things. Like and subscribe because I'm posting videos for you every single day so you're prepared on the market. I give you my unbiased viewpoint and everything that I see coming forward. Now, I tell you my positions, what I'm looking at, what I'm not looking at. I try to always remain unbiased. So even though I'm in puts right now, I still give you the upside potential where those supplies are and the potential to hit those. So I try to always stay unbiased, even if I'm in a position, and I try to tell you so you know if I'm even coming across a little bit biased, and I always try to correct it if I'm wrong in any way. I try to let everyone know where I was wrong and what happened from that. We try to focus on education first and getting you to ultimately understand better fundamentals and technicals here on the market. Also, the Twitter link is down below if you are interested. I'm posting charts on there. I'm giving you updates, tips on the market, news that's coming out. Like today, today's unemployment is the lowest it's ever been in half a century. We're going to talk about that statement. There's a lot of stuff in between here also, so all these charts, you can check them out. They're on my Twitter. Let's get back to it. Now, before we go into looking at CPI numbers, which is going to be a bulk of today's video, let's talk about what's happening here. First of all, SPY. We look at the daily. Let's look at what's happening. This is our 200 moving average on the daily. This is our trend line. So we're going to zoom out really quick and look. This is our year-long downtrend. We can all agree. We are in that level right now. So you can understand the resistance that's here. We are on top of the 200 MA right now. That is bullish. That looks good. That does look good. That's the only thing that's like keeping me saying there's a possibility of going up right now. That's where we're at. So we're at resistance though. I don't think it's any point to get overly bullish, but yeah, we'll get into that here in a second. Looking at Nasdaq is where I spend most of my time. I basically live on the Nasdaq chart. It's my very best friend. And if we look here, let's talk about a few things. So we're at our 200. Okay, this is our 200 weekly moving average. An even bigger level, okay? Giving you food for thought. If we go back to the 200 weekly average, the last time the Nasdaq was below this level, let's go. We have to go pretty far out. We're going to go to the weekly time frame real quick. 2020, during obviously COVID, you bounced off of it, but we have not really been below this 200 weekly moving average in a long time. We did get a break below it in October, and then we quickly got back above it. So I want to highlight where we are and what we are retesting here on the daily chart. You are retesting that key weekly level of the 200 moving average. And we got rejected a few times. A lot of sellers stepped in there. But overall, right now, we're holding above it. And you still have a little bit more room to go to around 11.7, 11.8 before you hit that trend line. Okay? So that's our viewpoint there. Now, I'm going to go into why I believe downside is imminent. We are being pushed an agenda down our throats right now that currently is saying CPI is good, CPI is great, inflation's going down rapidly. But I would argue, based on the data given to us, that is false. We've looked at overall, let's talk about what we've looked at over the past few days. What do we know so far based on data? That's good. Demand's gone down. That is good news. Why is it good? Because we need the economy to hurt before we can see it come back to normal levels, before we see inflation come back to normal levels, right? So demand is going to have to go down. Theoretically, we're going to see earnings start to go down also, okay? That's what we're expecting. And these companies are giving us that data. Like Apple, they're producing less products, right? Okay. But as we look at this data, what does it tell us? Something here is off. If we look at all items for CPI, this number right here, that's good. You got your decrease, your 6.5, okay? And give you food for thought, we're going to go really quick over here. This is your CPI basically over the last year. You can see we peaked at 9.1, slowly came down to 8.2, and then we started dropping a half a point every single month, basically. And so you would say, looking at this, oh, Tyler, obviously inflation is dropping, right? But I'm going to show you what's really dropping on this market, what is really affecting this move. And so when we come back and look, although the data is pointing in a direction, we need to look beyond just the number on top. We need to look at the underlying issues. Food, specifically. So this is all of food, the whole food category, all the way down, right? Right here as we look. 315 from November, it is up during December. So the food category is up. This is category 1. All food is up roughly, I believe, what is that, 0.3, 0.4%. Okay. Go down to energy. We'll go over energy real quick. Energy, oil, fuel prices, etc. Right? What's happening here? This is dropping drastically. You could argue that this is the only drop in the entire CPI report. 292 to 274. That is your drop. That is the bulk of the move. Almost a 10% drop as we look right there. Just want to highlight. In comparison, 6.5, 10%. Think about it. Big thing going. That's big. You literally had a 0.5% drop across CPI. And energy was a 10% move, people. Think about it. Really understand what's happening there. Okay? Going further, as we come down a little bit more, all items less food and energy. 299 to 300. Up. Guess what that's up by? About this is a smaller one, about 0.2. Okay. We get on further. Services, less energy services. It's up 383 to 384. That's up. Going down further. Medical care. What's going on here? 602, slightly up here. But if we go down and we look what's happening here, what's really getting bulked up here and really bumping up, it's hospital services, 378 to 383. Your insurance, those are going up. Yesterday, I thought rents were going to go down. Spoiler alert, rents are going up 382 to 385. I'll have this link down below if you want to check it out. This is what's happening on the market. But let me tell you, where inflation is easing is not on your transportation or anything happening there. It's on your airline. So congratulations. Our airline fares and energy costs of gasoline. If we look at the average American, the middle class American, what is the majority of your bills? I ask you a question. Look at your top 10 bills. Gas is probably in there, maybe. I'd assume. I don't know, probably. If we look here, what's all going up for you? All your food bills, your rent, your cost of living, everything except energy, and yes, if you take flights. Even your electricity on your energy bills should be going up. Mine have gone up, for instance, here in Texas, but it is Texas, so it gets pretty hot here. But that's food for thought. Okay. What does this tell me here? If we look at what the Fed is giving us, and again, I don't like to throw theories or conspiracies around, but the Fed is not going into detail about what data is actually changing. You have to dive in here and really look at this information. And when we look at it month over month, it's not good. If we negate what's happened with gas, specifically fuel prices, we can see here, fuel oil, what's happened? 553 down to 461. That's your biggest drop across the board. Energy commodities, oil again. Guess what? Those are your biggest drops on the board. Gasoline dropping drastically. That's the only area, if you go out and look, the prices are really dropping. Okay, I'm not talking to businesses. I'm talking business to consumer. I'm talking that's what we're talking about. This is consumer price index, not business price index. Okay, and if we look at these numbers, it has to concern you. The only area that's being affected positively is energy. So my question begins to say, well, what if energy rises? And this has been the going quote unquote black swan or negative thing that we had to be looking at. What if energy starts to rise again? What would happen theoretically to our inflation? Because as of right now, I don't see prices moving in a positive direction month over month. I really don't. I only see energy moving. I see energy is moving down where nothing else is doing too much in a positive sense here. This is what we need to be really looking at and questioning on the market. And you know what's going to drive this down? You know what will eventually drive food down, will drive cost of rent down, what will drive everything down in general? It's going to be unemployment. That is going to be the magic indicator here. But we're not seeing it. Nonetheless, we're seeing Biden, boast about, like we mentioned on Twitter, he's boasting about what's happening with our unemployment, ignoring the facts of what's happening because we've overspent. Basically, we've over leveraged our nation. We've just loaned out money here and here and here. And did we have to do it to a certain extent? We had to during COVID. We did. If you look at what happened, we had to. But nonetheless, right now we are in a situation, and this data to me is extremely, extremely bearish. My personal opinion, do your own research. Again, question everything I say. I encourage it, okay? You need to be doing your own research. But that's what I'm looking at here. This is concerning. This is appalling. I don't see how this is good. And I don't think the market's taking it as good. That's why JP Morgan's pricing in a 20% drop. That's why Morgan Stanley is pricing in a massive drop. That's why everyone is, the big banks, the big money is preparing for downside, downside, downside. If we can go really quick over here to Cheddar Flow, just to show you really quick. I'm not going to pull Cheddar Flow up right now. I'll probably do it tomorrow. Go more. I don't want to spend all day on this. If we look at what's happening, okay? If we look at what's happening, we come down really quick. Let's just look. These are IWM coming in, right? Destroying the Russell. Heavy amounts of orders coming in here, okay? We get on further. Apple. Massive orders across the book. I will say Netflix is a really just strong company and stock. I'm not going to lie. I do love it. You have some China. I love Chinese companies also. I'll get into that here in a second. But you're seeing a lot of big numbers specifically coming towards the downside on Qs, SPY, IWM, the indexes, okay? So I want to highlight that. Just so everyone knows, that's just what I'm looking at. This is my viewpoints. Now, going forward through this, what do? Do you maintain this fear aspect? Do you not trade the upside? Do I think the upside's not going to happen anymore? I don't want to go into that. I don't want to say that. But right now, from a longer term perspective, and again, my perspective for this trade, for this swing I'm looking at in March, is a 2-month, 3-month trade, right? I'm not looking to make my money tomorrow or the next day, right? I'm looking for a real setup, and I want to make the money on the overall play. I'm not interested in a little scalp for $100. That's not what I'm looking at here. I'm looking at big picture. So when we come into VIX, let's talk about this. This is another thing I think we have to talk about. VIX, you're at your lowest levels since when? April, 2022. Almost 10 months, people. Your lowest levels on VIX. Now, I'm not saying you have to pump from here. Data suggests over the past year that we have pumped from here on VIX. But right now, VIX is getting crushed, okay? I want everyone to understand this. While retail is buying, banks are claiming more lows are coming, more lows are coming, more lows are coming. Also, we see the biggest names in tech, the biggest names in banks, all the biggest companies out there right now, mass layoffs, right? Why are they doing this, people? Why are they doing this, okay? We need to start understanding what's happening. Maximum downside on here on VIX is down to $16. That's what I'd be looking at. I still think this is just too low. I just see downside in the market, okay? This is my opinion. Going to another viewpoint as far as TLT. TLT does continue to move in a positive direction. We talked about this downward trend that you basically had for the past year, give or take, since last basically January, December. We can see you broke out. You came down to the bump. This is called a bump and run, and now you are running back up. If you break highs here, you'd be pretty bullish on TLT. I'm not gonna lie. If you break above 1097, you'd be really bullish. I'd be very optimistic for TLT and bonds. Going into the 10-year and 30-year, this has been one of our best tools in so far. Like we mentioned, I always show the good and the bad here. You see the US 10-year versus 30-year. You are dropping, okay? We are dropping out of this inversion rate. We're still at 96.4%. That's still dangerously high, but we are dropping out of this somewhat, okay? We need to understand that. Going in further, we're going to look at just the yields in general. The biggest thing here is what we expected a move back to 4%. We got the move to 3.91, and then we rejected off that. I want to see how these bonds hold up over time. If they're going to stay, pumping back up, or what happens here. A few things we can know also is while we look at these bonds, the 10 and the 30, those are obviously rejecting off of 40 or 4%. When we look at the DXY, you're coming right back into that major level we have discussed. This is probably one of the biggest levels we will experience for an extended period of time here. We need to keep our heads on this. Basically, the 101.9 all the way down to 101.1 is a major support. DXY took a slap. And again, we've seen a lot of fundamentals coming against the dollar specifically, not just the dollar weakening, but what other currencies, specifically in other countries, are doing to weaken the US dollar. Specifically, China. A lot of stuff is going on there. Keep your eyes open. Again, I just don't want to cover the same stuff too often here. I like to keep it pretty fresh overall. Going back into the Nasdaq. Just going to give you my visual, my updates, what I'm looking at here. We're going to go to the 2-hour chart. We're going to actually turn off these indicators really quick. And this will also be on Twitter if you want to get this overall. So right now, you are making a supply. You have a supply going back here to roughly 11.58 all the way up to 11.62. After that, this is a smaller supply. You have I believe it's a 4-hour supply coming in at 11.72 up to around 11.8. That's where I'd be looking for. That's really the big target, and I do expect us to get rejected from that point if we do hit. Going into ES, my point looking at here, you've invalidated your smaller supply here, and my next level that I'm really looking to test, you have some more closer to 40.50, but I want to see 4,100 test. That's my big level there. But it's really important to realize what's happening on the daily time frames, which is why I just don't have faith in the short term on these either. If we look, the major things we've been watching for, the 200 MA, it's right there again. I don't know how long we're going to hold. Last time we got a day hold above and then we crashed back below. So we need to be keeping our eyes open. But these are things that I'm watching on the market. If you have questions, comment down below. This is my honest breakdown, what I'm looking at. And I'm trying to stay as transparent as possible, not to be too bearish or show any type of bias here. So if you have questions, you disagree with me, please comment down below. We'd love to answer those. Have a good one, traders.